Good day, everyone. Nobody likes having to pay for insurance, but let's face it, accidents happen. I'd like to illustrate why insurance may be quite beneficial. Okay, so there's a good chance you won't get in a car accident if you get in your car right now and go to the store. Okay, statistics back this up. Despite the fact that millions of Americans drive their automobiles every day, the odds of being involved in an accident are less than a minuscule fraction. Everyone understands the need for vehicle insurance since you never want to be in a situation where you get into a collision without it, despite the very minimal possibility that you would. You should never be in a scenario where your life's in jeopardy without life insurance to protect your family. Hello everyone! Welcome to Wealthy Wisdom. In this video, we're going to talk about what is life insurance and its benefits, a complete review of life insurance. If you're new to this channel, do like and subscribe to the channel. Life insurance may be likened to a safety net or insurance that would offer financial stability for your family if you died unexpectedly. I understand that it is not an appealing topic, but it is better to be well prepared and to have a plan. Assume you and your spouse make $50,000 each year and have a few children. Despite your assets and savings, your family would experience financial challenges if you or your spouse lost your job or source of income. The good thing is that if you lose your job, you can at least hunt for another one, preferably quickly. However, if you were tragically murdered while walking down the street after tragically falling into a massive pothole, your family has now lost another source of income for the rest of your life. Not to mention that your family may need to take time off work to deal with your loss, burial expenses, and any debts you may have accumulated. Even if these unanticipated occurrences are tough to deal with emotionally, the problem has just become worse if you aren't financially prepared right now. Even though your spouse was working in this case, many American households only have one principal paid worker. Your family would be in much worse financial condition if you died right now. If you get life insurance today, you may be able to save your family from going bankrupt or living in poverty if anything like this occurs. What is life insurance and its benefits? A complete review of life insurance. The title life insurance covers it well. It is life insurance in case you die. Your life insurance company will appear and present your family with a large check for $1 million, or whatever amount you decide while you are still alive. Your family will not face the financial hardship of losing your income as a result of life insurance. Consider life insurance as a safeguard against the loss of a source of income for your family. However, here is where things get confusing since not all life insurance is made equal, which might affect how much you must pay for your life insurance. We at Wealthy Wisdom are all about financial wisdom. This involves living within your means, putting your money away for a rainy day, and investing to enhance your wealth. Building up your assets to the point that you can live off of their revenues and interest. In my view, you should be everyone's financial goal. This removes the need for you to travel to work in order to make ends meet. Your investments will take care of you. Insurance salesmen hate it when I tell them this. But once you reach that point, you no longer want life insurance since your assets provide you with enough income to live comfortably. You don't need life insurance since your family would simply inherit your investments and be able to live off of them or sell them if required if you died unexpectedly. If that is your financial goal, you should buy your life insurance coverage accordingly. As a result, you might get life insurance for a certain amount of time. As a result, if you had life insurance for 30 or 40 years, your family would get a significant settlement if you died during that time period. If you do not die within the next 30 or 40 years, you will leave nothing to your family. As a result, term life insurance works similarly to vehicle insurance in that it pays out if you are in an accident. If you do not have a car accident, your insurance company will not compensate you. If you die inside the time frame, you will get a check. Keep in mind your financial goal if you do not die within the period since your family will not get a payment. Term life insurance may be used to produce long-term wealth by making investments using the coverage. Your goal should not be to make your family financially dependent on your life insurance policy. Whole life insurance is a second kind of life insurance, which brings me to my next point. As a result of entire life insurance if you die at the age of 35 or 105, your family will always get a hefty settlement. Why would someone not want full life insurance if they knew they would be paid? You might inquire. However, the guaranteed income comes with a significant price that you must pay every month for the rest of your life. Whole life insurance is much more expensive than term life insurance due to two issues. You begin by requesting that your life insurance company handle your money. They are not acting as an insurer to protect you against the worst-case situation. Because you requested a large payout after your death, they must include this additional expense in your monthly payment. Second, cash value is a feature of whole life insurance that allows you to invest your money via your life insurance policy. Before we continue what is life insurance and its benefits, a complete review of life insurance. If you like this video, don't forget to like and subscribe to the channel. Assume that your whole life insurance policy costs $1,000 per month. Your death benefit will be paid with a share of the revenues. When you die, your family will get this amount of money. If you bought term life insurance, your death benefit will be roughly $100. To keep things simple, let's suppose that $100 of the $1,000 is going towards the death benefit. As a result, the remaining $900 will be allocated to that monetary value. Keep an eye on things since setting up this savings and investment account with your life insurance policy isn't as simple as you would think. Your insurance company stores and manages the cash value portion, which operates as a savings or investing account. Oh, so I'm accumulating equity in the insurance business and assets by paying into this whole life insurance policy, you would think. But there is a catch during the first 3 years of your life insurance policy. This is due to the fact that the cash value element of whole life insurance is what everyone lauds since it allows you to grow, invest, and preserve your money tax-free. Almost none of the $900 you spend on its cash value is placed in your personal savings or investment account. That money is given immediately to your insurance provider, and the commission paid to your insurance salesperson profits directly from it as well. According to Consumer Reports, if the monetary value continues to accrue over time, it will rise by an average of 1.5% each year. As a consequence, your money isn't doing much good, and spending cash value money isn't any better either. You could cancel your life insurance coverage and get your cash value back, but this would be ineffective. You may now borrow against your life insurance benefit. You must pay interest to your life insurance company in order to use your own money. You may also wait till you die. When this occurs, the cash value component is transferred to the life insurance company rather than your family sins. As previously stated, there is a death benefit. It is delivered to your household. You were paying $900 each month, which would not be distributed to your loved ones after your death. As a result, for people who are investing their own money, term life insurance is typically a far better option. Life insurance provides you with the financial stability you need for as long as you choose. You may get a term plan for 20, 30, or 40 years and still have money left over since you won't be putting it all into a whole life insurance account. You can invest this extra money, and if you put it in a low-cost index fund, you could outperform the 1.5% return on investment. You also have complete control over your funds. Here's another suggestion that goes beyond the kind of life insurance policy you choose. The second most significant factor in determining the cost of life insurance is your age when you get it. Because life insurance costs decrease as you get older, you should lock in that lower rate while you're young. Now that you and your family are secure, you may stop paying for life insurance since you will no longer need it after you have earned the wealth you want. You are doing well. When it comes to the quantity of a life insurance policy, you should typically obtain something that is at least 10 to 15 times your annual salary. Thus, if you earn $60,000 a year, you should ordinarily get a policy that is at least $60,000. You may use life insurance to financially protect your family in the event of tragedy. Simply ensure that you're using it correctly and that you're safeguarding your family's finances rather than those of your insurance provider. That is what is life insurance and its benefits, a complete review of life insurance. It's a small price to pay for a substantial peace of mind. We've reached the end of another video and thank you for watching. I hope you understand what is life insurance and its benefits, a complete review of life insurance. If you like this video, do give us a like, subscribe to the channel and comment down below. Thank you and goodbye.